Breaking news, President Trump has just finished meeting with the trade union leaders. And according to the White House, because we didn't really get cameras inside beyond just getting a shot, the leaders of millions of American trade union workers were in attendance, and that the president asked them to call on Congress to build upon the momentum of the tax cuts by fixing what he called the bad trade deals that have shipped American jobs overseas. And apparently the president also reiterated his promise to continue fighting for America's workers. Let's bring in a man who ran three massive companies. Running one massive company is enough, but Bob Nardelli ran Home Depot, Chrysler, and a huge division of General Electric.
Yes.
And a few other things.
Thank you. It's great to be
Private
here.
equity galore. You're just unbelievable. Okay, Bob. He's meeting with these union members and union leaders, and that's certainly important. He's talking about trade deals. But earlier, his economic team came out and said, here's our growth outlook from now till 2020, and then beyond if the tax cuts remain in place.
Yes.
And he said anywhere from 2 to 4%.
Yep.
Does that square with you?
Well, you know, talking to some of my recent colleagues, we're pretty confident it's going to be at least 2.7 to 3% this year, Liz. I think, you know, what you just talked about is proof positive that we have a much more business-friendly administration.
Yes.
You got rollback in policy and regulations. You got the repatriation, which is contributing significantly the tax collected off the repatriation, a big portion of the interest on this year's national debt. You've got reinvestment back in your company. The overall corporate tax rate is going to allow a lot of jobs to come back. And his meeting with the union leadership is, again, proof positive that he is really working to repatriate not only money but jobs.
So why not come out and say 3 to 4%? Where's the 4%? And I'm just repeating what he promised on the campaign trail. And at certain points, you know, there are even sound bites of him saying maybe even higher than 4%. For
sure, we have to have 3% to continue to get the unemployment level and the unrecorded unemployment level back to where it needs to be, Liz. You got to have 3%. You got to have that kind of GDP to be able.
So why not, is what I'm asking. I mean, when you ran all these companies and you'd say to analysts and internal numbers, as we look at the Dow turning negative once again, I just want to let our viewers know that, as you faced your company and analysts who covered them, whichever one it was, it said anywhere from 2 to 4%. Would that work? That's a wide spread, isn't it?
That's a big range. But when you're talking about 2020, God knows what could happen, right? I mean, I think in my upbringing at General Electric with Jack Welch, you know, we would do 1 year would be solid, 2 years pretty solid, and 3 years is about as far out as you're going to be able to go with all the extraneous things that could happen, global issues, political unrest. So, I mean, I think he's given himself some wiggle room. I think what's important is what's in front of us. What do you think is going to happen in 2019 and so forth? But to go way out 5, 6, 7 years is a little bit of a stretch.
Especially when you factor in, you just gave a litany of positives.
Yes.
Less regulation, the tax cuts, bumps like that. We have higher interest rates coming.
Yes.
You could see it in the 10-year right now. That is in part what has spooked the markets at the moment, that we have a 10-year yield at 2.94%.
Haven't seen that for years.
4.5 years. Here it is now. It's 2.95 in 1 hour. In 1 hour, we jump. And it may not look like a big jump, but for people who follow the bond market, it's big enough.
Yes.
You have inflation possibility. The U.S. dollar has weakened.
Yes.
Slightly stronger today, but a couple of other things. So you've got him restricting immigration, which is also something he promised, just as more baby boomers leave the workforce.
Yes. So
that's a headwind.
There are issues. I mean, we've got the geopolitical issues that we have to deal with. It's the the black swan thing. What could go wrong, and what are corporations doing to protect themselves against that to the degree that they can? And I think what we see is a lot of capital reinvestment. We see commitment back to our employees and associates in the companies. In addition to a tax relief, we're seeing $1,000 bonus checks go out, which is going to stimulate. You got housing, although housing year over year is down. Housing is very strong if you look at the market.
And it's down. I'd love for our viewers to know. Folks, we got existing home sales for January. They fell 3.2%. Year over year, they're down 4.8%. What happened? It's inventory. There just isn't enough inventory. So this is a good reason for a bad number.
But let's look at all the major home builders, Pulte, et cetera. I mean, their stocks are way up against the average of
and
the
Home Depot's come out with bang-out numbers, and you ran that company.
Phenomenal numbers.
So if you were running Home Depot today, this number, U.S. existing home sales, would not spook you.
It would not, because what you have now is there's two major modes within Home Depot. There's the maintenance mode during a recession. Unless it's broken, don't fix it. And now you have the investment mode, where people are investing and they're starting to get back to flipping their homes. They're spending money on kitchens. They're spending money in bathrooms. Those are high-ticket dollar kinds of sales, and they're doing that to enrich the home so that they can flip it to get the curb appeal. And people moving in, of course, they're going to do the carpeting and all the other things. So Home Depot is solid. They had a fantastic quarter and a very strong year.